Welcome to the Pot.Live podcast. I'm your host, Lenny G. This podcast is all about connecting the community with the thought leaders of business and entertainment in the cannabis industry. As this industry expands and becomes more and more mainstream, we want to educate and entertain our listeners and become your choice and voice for all things cannabis. Thanks for joining us and enjoy the show. If you are into the recreational side of the cannabis industry, yes, stoners, I'm talking to you, then thepot.com is the online and mobile destination for you. That's right, THEPOT.com, thepot.com. Where else can you find the exclusive pot made of the month? Take a pot quiz and win prizes. Scroll through hilarious memes and jokes and check out the latest podcasts, news, and trends, all while having your own profile and voice in the pot.com forum. Visit thepot.com today and get lit. Welcome to another episode of the Pot.Live podcast. I'm your host, Lenny G, and today our special guest is Mr. Matthew Carr. He is the Chief Trend Strategist of the Oxford Club. He's the editor of Profit Trends, Strategic Trends Investor, The Viper Alert, Dynamic Fortunes, and Trailblazer Pro. He has a unique take on investing, and it has led to countless gains, including the largest returns in club history, 2 decades of financial experience under his belt. Matthew, welcome to the show.
Hey, thanks for having me, Len.
Awesome. So give us a little background, give our listeners a little background, just so you know our listenership, if you will, is a mix of people new to the industry, business owners, investors. It's a mix of everything. So you're talking to everybody. So give us a little background on who Matthew Carr is and how you got involved in looking at cannabis stocks.
In financials, I started out in the oil and gas sector. That's actually in commodities. That's where I cut my teeth. And that's actually where I learned a lot of the lessons that I still apply to this day. I've been with the Oxford Club, which is a financial publishing group out of Baltimore for, it's been over a decade at this point. But how I got started in cannabis was kind of interesting. So back when I was a teenager and everybody's, in high school using stuff recreationally, I worked at Starbucks and I had this moment where a family member came to me because they had a friend that was dying of cancer and was like a teenager that they knew. And so they're like, can you find, some cannabis for me? Because, this person isn't eating, they're wasting away. They can't get it medicinally here in this state, So I thought that was like kind of a profound moment. Like, here's something that does help people, that we do know helps people, but was not available commercially or medicinally for those people then. Now, fast forward, my wife has a chronic pain disease, Ehlers-Danlos syndrome. And in that community, cannabis is something that's talked about, because for anybody with chronic pain, one of the things that they use to treat it is opiates. And that has a lot of downsides, as we know. Not only is it, the possibility of addiction, but also the effects on the body, right? That you're going to have these long-term effects that are going to hurt a lot of your major organs. Now, that's the personal side. On the investing side, I found it really interesting. I started really paying attention to the industry once, Washington and Colorado legalized adult use. We started thinking about, here's an idea that this is potentially viable. But the companies that were available at that time, that were publicly traded, they were still truly just penny stocks. But then, Canopy Growth, Tweed, that became the first federally regulated and licensed producer in North America to begin trading, up in Toronto in 2014. Then it became very, very, very interesting. So I started covering the industry in 2016. We had these big legalization movements, both at the state level here in the United States, as well as taking place federally in Canada and in Canada. And in 2017, I started preparing investors for that national adult use legalization in Canada in mid-2018. So since then, we have been in the industry, doing interviews with CEOs, very similar. Cannabis Now, where I interview CEOs, advocates, medical professionals, farmers, growers, all that kind of stuff. And then covering this industry editorially with some segments like Beyond the Bong, as well as some cannabis-focused investment portfolios. So that's my background. That's what all of that brought me into this really exciting and interesting industry.
Great. Well, thank you for sharing that background. So let's jump into the meat and potatoes, right? All the investors out there, everybody got all hyped up on the pot stocks, if you will, a few years ago as they all ran up to incredible valuations. And then, boom, they took the slide back down, especially the big three. We'll call them Tilray, Canopy, and Aurora. They all took a big slide. Now they're bouncing back a little. Can you just tell everybody from the average, amateur investor point of view that just rides momentum and usually gets slaughtered, tell them, what was that run up all about and why did it come back down to earth so quickly?
So 2017, 2018, obviously were very great years for cannabis investors because we had that ride up into legalization in Canada. That was big. That also brought all these other stocks up with it, especially kind of the U.S. multi-state operators, the MSOs. Those all rode higher. Now, what happens in markets like this, because cannabis has endured several bear markets throughout its short history, and these have been pretty steep, much steeper than, let's say the bear market that we've suffered already in 2020. That's because expectations get really, really high. And then it fails to deliver. Now, from a fundamental standpoint, what happened for the Canadian producers is that here's a situation that you're having to prepare for this legalization, for this nationwide rollout. That means just like how, like here in the United States, let's say beer companies, we prepare for beer drinking season, which is in the second quarter, starting Memorial Day. Well, all those costs take place in the first quarter because they're building up stock. They're getting ready to ship out and roll everything out. Same thing taking place in Canada before that big nationwide rollout. Everybody's spending all this money. They're trying to make sure that there isn't a shortage because we were expecting that there was never going to be enough cannabis on the shelves. All those costs start building up. Expectations get high. I had talked to actually some CEOs in the industry at that time, and it was pretty fascinating because one of the ideas that they were struggling with was that, okay, you know how to grow an acre of cannabis. Well, that's easy. If I know how to grow an acre of cannabis, I can increase that by 1 million, right? And grow 1 million acres of cannabis. And that wasn't happening. You were having these crop failures and all that kind of stuff. So once those costs started getting in, once those losses started hitting, that's where you started seeing the Canadians roll over because the investors are reacting to that. The worst thing about sort of like the average or amateur investor is they tend to buy heavily at the top and then sell everything at the bottom. So a lot of people are buying at the top, and that led to the biggest collapse. Now, when we turn to the United States, we had a period in 2018, which came to a head in 2019, which was to grow at any cost. So you had all these multi-state operators that were trying to expand their footprint to as many markets as possible. Because the United States, this is a big opportunity. This is an $80 billion market for cannabis, but you need to be in as many states as you can. Right now we have 11 that have legalized adult use, and then the 34 that have medicinal. But you want to be in all of those markets as much as you can. The biggest problem is you're doing all this merger and acquisitions. That's costing money. That's taking on debt. You're paying for that with stock. And then because everything is illegal because cannabis is illegal at the federal level, that vertical silo has to be replicated in every single market that you're in. So that's where we had this big capital crunch last year, because as those shares started to roll over, as Canadians were getting hit with those costs, especially as they were preparing for Cannabis 2.0 launch late last year, the U.S. overextended themselves by this growth at any cost, and it all had to come crashing down. It was a really difficult situation, and that doesn't even include into the equation EVALI, right? Like that impact on the industry that came in and just devastated a lot of the sales.
Yeah, it's such an interesting ride to watch. So, all right, so you described what basically happened over the last few years. So now a lot of these stocks are at the bottom or close to their bottom. Now we're going through a pandemic, and amazingly, cannabis companies are doing well because it's one of the essential businesses in a lot of places. As the U.S. market, which is not federally legal at the time of this recording, but the toothpaste is out of the tube. It's going to be at some point. How does an investor position themselves to take advantage of this long term? Do they go with some of the bigger, more well-capitalized companies? Do they look for some diamonds in the rough that may benefit once it's legal in the U.S.? What are your thoughts there?
So this is actually really interesting. One of the things that I said earlier this year is now is the time to be selective, not speculative, right? There's always this tendency from investors, especially in nascent industries like that, which tend to draw in younger investors, to take the shotgun approach, right? There, I'm going to buy a little bit of this, I'm going to buy a little bit of this, and I'm going to buy all of these different companies. And then if one of them succeeds, hey, I've done well. This is not the time to do that because, like I said, we had EVALI last year. That was the big thing that we were focusing on. Like I had a legislative roundtable at the end of 2019. That's what we talked about. We talked about like, here is this lung problem being brought in by the illicit market. That shows the kind of dangers the illicit market still holds and its big impact on the industry. Now with the pandemic in COVID-19, I'll throw it on top of that, which we weren't at all expecting, that this is the time that you do want to be very selective with what you're doing in cannabis. So I like, Canopy Growth has been one of my favorite companies, my number one pot stock to own for the last several years. I still think with it around that $15 to $16, it's kind of crazy. That's kind of like a no-brainer. Let's say you're going to buy Apple or Microsoft or something like that. That's what Canopy represents in this industry. Then I like Innovative Industrial, which pays a dividend. That's a real estate investment trust. As the medicinal market expands across this country, Innovative Industrial goes out. They buy these properties, they lease them back to growers, and then you get paid a dividend at the same time. That's a great opportunity. And I like growers, like Grow Generation. But one company that I think is very fascinating right now is something like Trulieve. So Trulieve, here was a company that focused on one market, right? This is a company that decided we're not going to grow at any cost. We're just going to focus on Florida. And I think
I'm Matt, just so you know, I'm in Florida. So yeah, Trulieve's the big boy down here, obviously.
Yeah. And what is it? It's 47 of their 49 dispensaries are in the state. That company is reporting a positive adjusted operating income. We know that Green Thumb Industry was the first U.S. MSO to report over $100 million in quarterly revenue. And not just the first U.S. MSO, but basically the first cannabis company. Because if you convert, Canopy's and their revenue to U.S. dollars, it's not over 100 million. Curaleaf will probably be the second, and Trulieve is probably right there too, as they end up reporting soon. So if it's not this quarter, I'm sure it will be next quarter. So I actually like those companies that have taken that approach, like Trulieve, to focus just on one market. Planet 13 did the same in Las Vegas. Unfortunately, right now, when your focus is Las Vegas and that whole city is shut down, that is a detriment. But it still held up well. I mean, you're talking about a company that produces a lot of the sales in the state. I think it's like almost 10% of all the sales in Nevada are from Planet 13. So I kind of like that approach right now. These companies that have been very selective have focused on singular markets, and they're not as exposed to the rest of the country and a lot of the debt that the industry is struggling with.
Now, have the Canadian companies, let's once again use the big three as an example, have they been allowed to do a land grab in the U.S. for future business when it becomes federally legal here? Or have they held off on that and concentrated on Canada?
I think they're still concentrating on Canada. I know, Canopy owns some hemp, but there's some big, TSX has warned in the past that, anybody that violates their terms can be delisted, and that means operating in a country where it's illegal at the federal level. So Canopy has been very, especially under Bruce Linton when he was CEO, very selective in their approach. I believe that if it is legalized at the federal level, yeah, those guys are definitely going to come down and grab as much as they possibly can. and they've said that they would. And I think a lot of the MSOs that I've heard in the past, that is have actually kind of protected them somewhat, that without this federal legalization, that's allowed them to kind of expand their footprints, kind of being with this moat against those more capitalized Canadian licensed producers.
Yeah, I like how you differentiated between the regionals like a True Leaf and the nationals up in Canada that we discussed. And I think you're right. You know, Canopy has Constellation Brands behind it. They just exercised a bunch of their warrants or options, I believe. So they're not going to let that company fail. They're too big of a company on their own to let it fail. So let's talk about the opposite situation with Aurora. Aurora is down, I don't know, it was down 81%, did a reverse stock split. And now in the last week, they have jumped back up to, I mean, not great levels, but almost where they were a few months ago at least. But it looks like a huge jump, but it's really the same price they were at in March. What are your thoughts on that company? I know they have a lot of debt. They've had a lot of issues, but they're also a huge company too. Do you think that a company like that can survive with the amount of debt they have and the cutbacks they have to do during the pandemic? Or is that a riskier play?
Well, I think some of this with Aurora is kind of like a short squeeze. I mean, when you see 2 days of, plus 50% share price on a solid revenue report, but still, I mean, what they reported 75 million Canadian, so it's like 41.5 US. I still think they probably survive. I just don't like, so for me, it's always difficult because I'm not a huge fan of reverse splits. They're
usually a death sentence as far as share price, for sure. And it was when it first happened. The first few days, it just dropped immediately, right?
Yeah, and so that's why I said this kind of feels like I wouldn't be buying Aurora at this point because of this feels like a short squeeze move. This big jump higher after that reverse split. So that's why I would maybe wait off and look at a better entry. But it's always kind of hard when you see Terry Booth, Cam, Batley, but they all leave. That sort of the rollover, the turnover in leadership. But I do think, like I said, I do think they survive. I don't think they're going to go under. I don't. But they had to do that reverse split just to avoid delisting. That was one of the things that I was talking about a couple of weeks ago. That we had this great moment over the last couple of years, which is all of these marijuana companies and cannabis companies being listed on major U.S. exchanges. This was something that we never thought possible a decade ago. Now, because of the 2019 bear market in cannabis, then throwing the 2020 bear market and the broader bear market on top of that, a lot of those companies were then in jeopardy of being delisted. And so Aurora was one of those. Cantrust has already been delisted. So, and I think there's some others that are still in jeopardy.
Yeah, Cantrust, I saw that was delisted. So that was a Canadian company focusing on the medical education and sale of marijuana. Is that correct?
It was. I mean, they started out in medicinal, and they had a great reputation in the medicinal sector. Then, they just did some. I think what Cantrust really kind of highlights is some of the, I don't want to say arrogance, but just, I guess maybe it would be a little bit on the arrogant side of what they did and what they got busted for, which was, they were growing illegally in unlicensed rooms from October to March, but had applications for those rooms in, and they were approved in April.
Oh, okay. So they weren't delisted just because their platform failed. They were doing some other things. I wasn't aware of that.
So there's a really simple way to be delisted from the NYSE and NASDAQ, and that's if your share price falls below $1 and it stays below that for 30 consecutive days. So with the bear market that has happened, Cantrust was already in trouble because of the stuff that took place last year, and then they had licensing issues up in Canada. Their price was well below $1, and it stayed that way. And so they got delisted. And there's others that, like I said, that do have to worry about that. And again, that's why Aurora had to do that reverse split, because they were like, well, we don't want to be the next one, the next major to go down this path.
Right. Yeah, I find it all fascinating. All right. So little disclaimer for everybody. Matt is not telling anyone to invest in anything. He's not telling you to buy a stock that he may like. Neither are we. We're just giving information for you guys to digest and do your own research. And if you want to do something, great. So Matt, give everyone what's a little cheapie that you like? What's a cheap stock that people, maybe an average person can't afford to buy the innovative stock at $70 a share or one of the largest stocks, and they want to buy something cheap just to take a flyer with some play money?
Well, like I said, I really like Grow Generation. That is a company that you really kind of can't go wrong with. This is, an organic hydroponics retailer. So same thing with innovative industrial. As it expands, as the cannabis market expands across the country, it continues to grow with it because all of the growers are using their equipment. All the dispensaries are coming to them and buying that up. So that is to me is a cheap, trades for $5.60 a share.
What's the symbol on Grow Generation?
GRWG.
GRWG. All right. Awesome. All right. So go ahead, Matt.
But I was going to say it does trade on the NASDAQ. And this is actually one of the stocks that is not only outperformed the broader market this year, but it's outperformed the cannabis sector itself because it continues to report, positive operating income or EBITDA, as well as see solid revenue growth. So I like it's a nice little play that I have long enjoyed.
Have you ever heard of Harvest Health?
Harvest Health, yeah, the MSO.
Yes.
Yeah, they are.
Any thoughts on that, or have you not looked at that one?
So this is a company that they wanted to have the largest national footprint in the U.S. And they were doing all of those deals to expand. Some of those deals they've had to, cancel and walk back, and so that's a little bit of an issue. I think what do they have? They have like 31 dispensaries right now, right in about a half a dozen states. So it's not a biggest like a Cresco or a Curaleaf or something like that, but they're trying to build there. I think they report earnings this week. It'll be one to definitely watch in my book because I think it has a lot of upside, but it has come down because of those deals that it had intended, that M&A activity that was all the rage over the last couple of years for the American MSOs. Those started falling apart, which we saw were probably going to have to happen.
Yeah. Yeah. All right. So tell us a little bit about the platforms. Obviously, you're very knowledgeable and seem very passionate about following this niche along with others. Tell us about the different platforms you have. Oxford Club, and you're the editor of several others. Tell us about where our listeners can find you and what each one concentrates on.
Okay. So Profit Trends is probably I would recommend as the first introduction. This is a free website, profittrends.com. We do a free e-letter or educational advisory that we send out 5 times a week. We cover cannabis on that website. One of the things I specialize in. We also do, some Cannabis Now videos and interviews with CEOs and advocates. But that's a good introduction because I will not only cover cannabis, but we'll also cover a lot of the things that part of my job entails, which is, chief trend strategist. Part of it is new trends. So 5G, AI, AR, VR, cloud computing, all that kind of stuff, cryptocurrencies. But it also includes cannabis. And that has been, one of our big focuses over the last several years. Strategic Trends Investor is a monthly newsletter that I send out. We do have a reefer retirement portfolio in that. And there we will cover very similar to the Profit Trends website, the same sectors, but this is more premium research. So this is where you're going to cost a little bit of money per year to sign up for, but me and my partner, Dave Fessler, do cover this as well as a lot of other very hot industries for investors. The other services, those are what we call VIP trading services. Those are for more experienced investors. We'll do options tradings. Dynamic Fortunes focuses on a lot of seasonal trends. Viper Alert focuses on small caps. And then Trailblazer Pro focuses on microcaps, small caps, as well as cannabis. And then even we're getting ready to get into some psilocybin stocks down the road.
Wow, that's great, man. You have a lot going on. So what are you most excited about out of all those platforms right now, or where do you see the most interest lately?
Well, right now, so cannabis was very interesting, but what ends up, to me, is very interesting. We had a lot of interest in it over the last couple of years, but of course, that bear market, once we hit those lows, both for cannabis, people did not want to hear about it. So we did have to shift a little bit away from it. But I still think there's a very exciting opportunity. This is, I forecast that this was going to be a $200 billion global opportunity a couple of years ago. And it was very funny because I said that and I was an outlier to the upside. Then kind of showing the optimism or almost euphoria, there were CEOs that were saying 500 billion to $1 trillion to $1.5 trillion over the next 10 years. But I think, cannabis is one of those areas that there is this upside potential, not only here in the United States, which is, like I said, this big $80 billion market. You have the potential for federal legalization or a change at the federal level, I believe, by 2025. But it's more than that, right? This is a global market. We're talking about Canada. We're talking about Europe. We're talking about Germany. That's one of the things that helped out Aurora, even the potential for China. And then this is a market that also has the ability for innovation, like we've seen, that it's no longer, when we first started, it was talking about dried flower. That's not even, it's not even like half of revenue anymore, Now it's like all these new products that are coming on. And that to me is a very exciting time right now, because this year was a year where the comparisons were already going to be good because of all of the losses and debt and everybody was taking on the last couple of years. This is where it was going to start paying off, especially for those Canadian companies and the Cannabis 2.0 launch, especially in the United States, as you start having these new markets be involved. So that's what I really, really like right now, is this opportunity for infused beverages, for concentrates and tinctures, and all of these coming online, not just here in the United States, but in Canada and even into Europe and Latin America. That's what I love most about the cannabis market. This is a nascent market. We're still only, a few years old, but there's just all of this upside ahead of us.
Yeah, it's very exciting. It's very exciting. And all right, before we finish up, last thing, I think you might have just hit on it with your most recent answer. Give us one thing that overall in the industry you're super excited about and concerned about.
Super excited. Well, I think I covered some of that about the U.S. industry, about this global opportunity. Those are all things that I'm very excited about, that the idea for innovation. My concern, let's say if we take legislative issues off the table, like that slow pace, even debt, is still that illicit market. I think one of the things that we take away from 2019, which seems, decades ago at this point.
True, very true.
Everything else that has happened, but that EVALI, like this was an illicit market problem that bled into the legal market and impacted the legal market. And I think that
so EVALI is just for people that don't know, EVALI was basically the vape issue last year.
Yeah, the lung disease.
Right.
So this vaping crisis, which hammered cannabis companies and even hammered sales of vape pens for many months, but that just showed like how prevalent that illicit market is and how much damage it has, the potential damage it has for the legal market. So until the industry can really kind of push that further to the fringe, I think you've always got to be aware that is there, that there could be another black swan event that comes from it. And so I think as long as you understand that, that's fine. But that is my number one concern. I would love to see some sort of legislative measures taken to kind of push that market out. But until then, that's my number one concern.
That's great. Matthew Carr, thank you so much for being a guest on our show and dropping so much value and wisdom and expertise for our listeners. Thank you for the time today.
Thank you, Len.
And we will see everyone next time on the Pot.Live podcast. Have you visited MJ.com? MJ.com is the online destination where you can find everything you need to know about the emerging legal marijuana industry. Where else can you find the latest original content, news, and trends? Connect to a local doctor to obtain your medical marijuana card, receive exclusive brand savings, and have your favorite product delivered straight to your front door? MJ.com has it all. Go check them out.